Hey traders from around the world, what's going on? It's me, your boy, Jeremy Alexander Newsom with RealLifeTrading.com. Hope you're doing absolutely fantastic. It's Wednesday, so tonight actually headed to Las Vegas. Gonna be in Las Vegas all day tomorrow, which is Thursday, Friday, Saturday, and I come back sometime Sunday. Already got a plan to meet up with a few traders, so if you're in the area, hit me up. Number two, so just to clarify, I had a few traders email me the other day asking about the Newsom indicator. It's not actually an indicator, like nothing that I can sell. There's no actual thing that you can put on your charts. It is purely just a random thing that occurs anytime I leave the country. Not anytime I travel, because I'm traveling like at least once every other week. So again, I'm going to Vegas this weekend, and I'm going to go to Kentucky next weekend, and then I got, where's Chicago, and then Dallas. So anyway, it's only international travel, and randomly enough, when I travel internationally, the market tanks. That's just one of those random things. Speaking of Dallas, by the way, this Sunday is the last day to pick up your Dallas, Texas real life trading golfing event tickets. So I talked about this a few weeks and a few months ago. So in September 29th, coming to the Dallas area to play some golf. Gonna have a webinar, like a physical presentation called How You Can Get Paid to Play Golf. Let the golf industry pay you to play. And that's gonna be at 10, and then we're gonna play some golf at 1. So I currently have 3 real life traders signed up for that. Just as a reminder, the last day to sign up is going to be this Sunday. So if you're in Texas, Texas is a pretty big state, but if you wanna come, regardless, weather's gonna be nice, late September, be there or be a triangle. All right, let's go talk about the markets really quick. SPY, not too much going on today. It did or is currently making a higher high and higher low relative to yesterday. The market's still open right now, but it was a bullish gap and go earlier this morning. Means a bearish candle gapping up. Bearish candle gapping up. So nice little gap on the SPY. Trend still looks strong. Nothing too crazy to see here. The Qs, I gotta give a shout out to my good buddy Grant Benson. Had a nice little trade on the Qs. This was a potential weekly options newsletter candidate. It was either gonna be this one or IWM, and I went with IWM, which hasn't triggered yet. But the Qs, white candle gapping up, right? So retest gap. Yesterday was the retest. And so if you hop in here to an hourly chart, I was simply looking at this to break out and continue higher. So here was, don't know what that is. Well, I do know what that is, but here is trying to scale the chart. It's all about the scaling. Turn off the extended hours really quick, and here's kind of what you'll see from yesterday. So you had this nice little channel looking thing right there on the hourly chart, right about there. And so I was going to just set an entry here with a stop down here. That's going to be kind of my setup for a weekly options newsletter setup on the Qs. So anyway, that's kind of what Grant did. Grant bought into the low of this right there, that channel, and rode it up all the way up there and got stopped out for about 1.37R. So good trade, Grant. Well done, man. Anyway, so that's the Qs. I don't see anything too crazy on them right now. Bullish to neutral. Here's the IWM. So looking for the IWM to kind of retest that gap and potentially bounce off of the 200 simple moving average right there. Here's the Dow Jones, and the Dow Jones also making a higher high and a higher low. A lot of people looking and waiting for the crash to come. It's obviously possible, but I just don't see it yet. I mean, one candle can change everything, including your life. But there's if it's going to happen, it needs to happen tomorrow, which I am traveling tomorrow, just not internationally. So I guess we'll have to kind of see. So there's the Dow Jones. Let's go look at some individual stocks. Actually, before I do, some of you might remember the survey that we sent out last week, I believe, sometime I sent it out last week. And it was a survey entitled, what's your biggest challenge of trading? We got so many phenomenal answers. I more or less mentioned, hey, if you want to take the survey and you want to give them your name and email address, you can enter a prize and I will send you a t-shirt. Well, the winner is a gentleman by the name of Brock J. Last name starts with a J. So Brock, we're going to be emailing you actually. By the time you're watching this video, you should have gotten your email. Email us back with your address, and we will mail you a real life trading t-shirt of your size, my man. Thank you so much for being a part of the survey and helping us enrich lives more. There's going to be a lot of benefit that's going to be coming from that survey, ladies and gentlemen, so I appreciate you taking the time to do that. All right. So some more stocks that were requested. Here's Walmart, ticker symbol WNT, and Walmart trading sideways into earnings. This is my chart for earnings, and here's the weekly time frame. So the reason I'm looking at the weekly is because it's a pretty big picture move, big resistance that it broke out right here. So if Walmart gaps down to the 79.10, I really don't know what it's going to do. That's why it's in purple. It could bounce bullish, it could bounce bearish. I'm just not entirely sure. But otherwise, if Walmart on earnings gaps above the high and clears 82.15, that's going to be a pretty strong gap, I think, bullish. And then if it gaps down to the long-term moving averages down here, I also think that would be a buying opportunity. Why do I think that? Well, weird as it sounds, but the last time the market of Walmart has interacted with the long-term moving averages, it's bounced. So just trying to do the same thing twice. Here's Target, ticker symbol TGT, and Target actually had a nice bullish gap and go today as well. So you'll notice yesterday, bearish candle made a lower low and a lower high. Today, gap action. So even though it is a bearish candle today, it's still a gap and go because yesterday's candle was bearish and there were some people trapped. So look at this 5-minute chart and you tell me, are there any opportunities in here for you to have made some bullish money? As soon as Target opened, it dropped, right? So you wouldn't have gotten in bullish at open, but maybe down here somewhere where these candles are showing some reversal patterns, or after this hammer comes in right there, or after the breakout, where we were looking at it in the afternoon was getting in bullish here with the stop down here somewhere, and I just didn't take that trade in time. And it would have worked moderately. It wouldn't have been an amazing trade. But either way, Target, decent earnings gap. Here's the weekly chart. And the weekly chart, I have a little bit of a, what looks like it could be forming an inverted head and shoulders pattern. Something like this. I'm not saying that's going to happen for sure. That's just what it looks like on Target. In my personal opinion, here's the monthly chart. For people who like Target still, it seems that it's in a very long term, like months and months. It could take 2-3 months longer down here to start bouncing. But this is the second time since 2009 that it's interacted with the 200 simple moving average on the monthly charts. All I'm saying is if you like Target long term, it's in a buy low, sell high location. Baidu, ticker symbol BIDU. A lot of people interested in this thing since it broke out of that triangle. And here is the daily chart on Baidu. So this 226 price resistance, let me just show you where that's coming from. This is the weekly chart. And you might wonder, well, how'd you draw that line? Well, this resistance is just simply a price where we have stopped before. You'll notice back here in 2014, perfect locations. That's where we stopped, and we're stopping there again. Baidu has had a nice breakout of the triangle pattern. It is confirmed. We talked about that a while ago. And now that we're trading sideways, one of two things can happen from here. It's in a distribution, meaning it's going to trade sideways for a little bit. So you either buy the dip, buy low, or buy the breakout. If you are trading bullish to neutral, all right, you could do credit spreads, bull put spreads. If you want to buy shares and do covered calls, we also talked about that the other day. So if you're looking at buying, buy low because it's in a distribution phase, it's at a resistance, and if it breaks out, buy the dip of the breakout. But Baidu, in my opinion right now, I would say bullish to neutral, it's at a resistance, take it from there. Here's CSCO, Cisco Systems. Here's the weekly time frame. Cisco Systems on a weekly chart showing a pretty nice candle. This is a new white soldier, one white soldier candle on a weekly chart on Cisco, which is really not that bad. Here's the long-term moving averages. You're above those nicely. The daily chart, above those nicely, actually smack in the middle. So look at the angle of these moving averages long-term, and we can see that we're definitely going pretty sideways. So if we're trading sideways on Cisco, especially being a blue chip buy and hold dividend paying stock, you want to play it bullish to neutral, right? Buy low, sell high. So here's the resistance at 33.42. We have a long way to go if we ever break out of that pattern. So that is interesting to note on Cisco. But here on the daily time frame, as of right now, I wouldn't be super eager to trade this bullish because it's already at a resistance, right? It's already done its move. If it breaks out of here, let it pull back and then buy that dip because really this was the location to be buying down there on Cisco, right? Trading more or less sideways, buy low, sell high, easy to do. Verizon and the AT&T, here's ticker symbol VZ. Verizon, trading sideways, always a fun buy low, sell high stock, and this is one I've been talking about really for like the last 2 or 3 months. It's coming into this $44 price range, and every time I bring it up, I say the exact same thing. This is not sexy. This is the epitome of buy low, sell high, hold until you make money. It pays good dividends, buy it at a good support, and it was at a good support around 44. Now we're at 10% higher than that. Still a decent place to buy it though. It's not the most optimal location, but here's the daily time frame. Verizon rarely just has megalithlically strong bullish moves. It can, of course, but here's your pennant pattern. So if it breaks out of that, I think the trend is bullish. It's Verizon, buy low, sell high. This was a beautiful bullish gap and go down here to really get the party started. AT&T, the analysis is almost identical. It makes sense because they're very similar stock. Here's the weekly chart. And the weekly chart, long-term moving averages on AT&T, you'll see these pull up. We traded into the 200 simple, right? So last time we traded into the 100 simple and bounce. This time we traded into the 200 simple and bounce. We've done that before, right there, bouncing off the 200 simple. So the long-term blue chip, dividend paying, buy and hold, those stocks really do respect their long-term moving averages very well. They don't move super fast very often. They just kind of sit there, do their thing, hang out, and make magic happen. Qualcomm channel looking good. So let me pull this up. Here is the daily time frame, and Qualcomm, it, at least to me, does appear that it is in some type of channel. So this is the daily chart. Really, I could probably get rid of some of these lines. Let me delete this one, kind of a lot. Simple. Support, resistance up here somewhere, buy low, sell high. Earnings are over, dividends are approaching. So if you want to get some dividends, maybe you can buy this before the ex-dividend date. Kind of looks like a little bit of a double bottom down here. We're kind of retesting today. I'm not personally going to take this trade, but if you're looking at buying Qualcomm, somewhere around the $51 price range would be where I would. And of course, it's a buy low, sell high, longer term hold, not very appealing financially. It doesn't move that fast. This is still the weekly chart. Monthly time frames. Just looking for a moving average that we're above, but this is a good trend. Check this out, all the way back from 1999. So low as we go, probably 45 on Qualcomm. And again, that would probably be a pretty decent location to buy. The interesting thing to consider is this is a long-term lower high right there. So we're going to struggle for a while on Qualcomm to really start regaining some bullishness, but it is in the area of which it could happen. Here is FCX, and FCX had a beautiful gap today. There's the close of the market, ding ding. This is the daily chart, up 5%, and this was a phenomenal day trading opportunity. Here's the 5-minute chart on Qualcomm. Now, I know this one was absolutely hard to catch, and it was a big move. There's a lot of real-life traders actually in FCX, probably one of the top 20 most held positions of stocks for real-life traders, and mostly because I was just posting tons and tons and tons of charts back in here since February and March, mentioning this is a good longer-term buy location on FCX. But let me bring up a recording. So yesterday in the afternoon trading room, I did bring up FCX and mention what I would like it to do. Obviously, I can't predict the future. I didn't know this was going to happen, but this just shows you how you can plan a day trade even over 18 hours in advance. Let's hit the tape. It looks a little more weak, if I'm really being honest. Pretty nice double top. Close below the neckline. You got a nice little new white soldier. New black crow today. If FCX tomorrow opens above the high of today, that would be very bullish. If it doesn't, I think we trade down to the 50 and then hopefully bounce. But if we don't bounce off the 50, we're going to come back down to 12. So, right, all that saying to say I do have a wager on FCX. I do absolutely think it's bullish. I'm very confident it's going to go higher. 1632, if it doesn't hit there before October 15th, I'm going to shave my eyebrows. I got a $16 covered call expiring this Friday. That will expire worthless. And then I'll probably look to do another 16 or 1650 for September. But so far, I like the gap on FCX. If you're looking at playing it bullish, I think that's smart. Also, one other small thing. So a good buddy of mine emailed me, Sam, and Sam was asking about which stock would hit the $200 mark first? Apple, Baba, or Facebook? I would love to know what you think. Click that little button right there that popped in the top right-hand corner of your screen and cast a vote. I also have this on Twitter. If you follow me on Twitter, I got a poll. Right now, 57% are saying Apple would hit the $200 mark first before Facebook or Baba. My opinion, Baba. Baba gets there before Facebook or Apple. I think that is almost a fact. We'll see, of course. Earnings are right around the corner. Excited to see what happens on Baba. Very cute bearish candle today. If it gaps up, it looks a little bit bullish. Even if it gaps down, it looks a little bit bullish. It just depends on where it actually opens. Very strong trend. Yep, I think Baba gets to $200 first. I know it's probably the farthest away, but it looks real nice. Last but not least, here's Google. And Google, just a small little pop, right? Talked about this one on Monday. Talked about the doji. There's a few people in it, and you're already up an R. Not too bad for free analysis. All right, ladies and gentlemen, I will see you on Friday where I'll be broadcasting from Las Vegas. And until then, remember, love life, and trade. You guys rock. Bye.